Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And we have a returning guest who appeared back in May 2022, so over 2.5 years ago, which was episode 239. Terry Harbort is the president and CEO and director of Talisker Resources, a junior mining company involved in the exploration of gold projects and have two advanced stage projects, the Bralorne Gold Complex and the Ladner Gold Project, both advanced stage projects with significant exploration potential from historic high-grade producing gold mines, as well as its Spencer Bridge project. Terry's a structural geologist by background with over 25 years experience working across Australia, South America and Canada during his career, and he discovered a few significant deposits like the AngloGold, Ashanti, the Colosa and Gramalote deposits. At the helm of Talisker Resources for the past 6 years, Terry's going to give us an update since we last spoke, an overview of the Bralorne Gold Project and their approach to sustainability and environmental responsibility, and what some of the biggest challenges they're facing at the moment. Our sponsors, Hawcroft, are leaders in property risk management in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, and asset criticality assessments, and more. They work across 600 sites globally. Hawcroft supports all areas and disciplines of mining, minerals, and resources. So if you're looking for any property or insurance risk management services, then please visit their website at www.hawcroft.com. All the details are in our show notes. Terry, welcome back to the podcast. How are you doing?
Hi, Rob. Thanks very much for having me back on. Always a pleasure.
Yeah, thank you. And hopefully we won't leave it as long as last time, which was 2.5 years ago. So for those that obviously didn't listen to that episode, encourage you to go back and listen. But for those that are new to the podcast also, I just wondered if you can tell the audience a little bit about yourself, a little bit about your career, about your background, what you've been doing up to sort of present day.
Yeah, sure thing, Rob. I'm a pretty technical CEO. My background's as a geologist, and specifically in structural geology and tectonics, which is a real passion for me. Something that I always was amazed at was how rocks could deform, both in ductile and brittle sensors. And out of all the fun things you can study at a geology course, that was the thing that really drew me in, and ended up continuing on to do a PhD, looking at formation and deformation of continents in convergent margins, which then led into a career looking at ore controls, and really over the last coming up to 30 years now. Unfortunately, I hate to say that, as we're all getting grayer, older, balder, and fatter, but really that's been my passion going forward in career is looking at ore controls, looking at structural controls of that, and really looking at a big deep picture. So looking at starting at a geodynamic level, moving through metallogenic and then tectonic, and then right up to structural deformation and continuity of fluids. So when it comes to veins, that's one of the things I love, and I've been very fortunate here since joining Talisker to be focused pretty well both on orogenic vein systems and on low sulfidation epithermal vein systems. My history looks a little bit like, I think, a lot of people who survived the Bre-X.com bubble and bust. I left my home country in the early 2000s. I think gold was $249 an ounce US. So a very, very different time to where, we're orders of magnitude different to that now. And I was fortunate to pick up a gig with AngloGold at the time, who now, of course, AngloGold Ashanti, with a good friend of mine who we actually had the same PhD supervisor who luckily threw me a bone, and I was able to leave my country and work there and work for Anglo for about 10 years, several years in Peru, but a big program in Colombia where we ran a big greenfields exploration program. Was massive at the time, great experience, about 150 geologists on the ground. And it had some pretty good successes coming out of that with our team. As you mentioned there, La Colosa, I think, ended up 28 million ounces, and Gramalote, that I think B2 is now putting into production, about 6.5. So really great experience to be working in the big team there and having some great successes. Ultimately, though, we all move on. There's always reasons why a lot of us don't hang around with major companies. People often, if we've got an entrepreneurial streak, which our team did, we sort of, run out of interest in the big companies. And one of my business partners was good friends with Sean Rusin, who was who was the early CEO of the original Cisco Mining. So we all left as a team and became an arm's length technical group for the original Cisco Mining. Our brief there was, sort of to develop a global exploration strategy. So really doing what we did well. Most of your listeners will probably know the history there. Was a hostile bid by Goldcorp for Canadian Malartic, which was and still is Canada's largest gold mine. White Knight came across the top with Agnico and Yamana, who ended up buying the project out. Sean Rusin, how, I don't know, but was able to spin out a 5% royalty on that massive deposit and use that to form a Cisco Gold Royalties, which is now sort of a $5 billion royalty company. So very successful. And our technical team, very fortunate, got taken across to that royalty group, and fortunate again to be involved in a large number of project reviews, and having to recommend on what to do and what not to do as they built that company. And ended up working there with the newer Cisco Mining, which has just been bought out. John Brzezinski's company there, Windfall, just been bought out by the South Africans. And also working on the Caribou deposit, which was what was then Barkerville Gold Mines, and then ended up a Cisco Development Corp. And each of those deposits, I think, got to about 6.5 million ounces. So a lot of fun, very both orogenic deposits, very similar to the project that we have now, the Bralorne Project. So right in my wheelhouse, things I love to work on.
Just want to go back to when obviously you studying structural geology. What would you say has helped you in your role as the CEO of Talisker, studying structural geology as opposed to maybe studying a broader geology subject? What would you say? How would you say it's helped you studying, I suppose, a little bit of a niche in structural geology than rather a broader geology subject?
Yeah, Rob, look, I think it really comes down to understanding particularly continuity of these deposits. There's been a lot of classic failures in vein mining around the world where there hasn't been enough drilling, or they don't understand the modelling of these structures and what the gold distribution's like. And also has allowed me to come into projects that are really brownfields camps that might have had 50, 60, 70 years worth of technical work done, and people have missed the fundamental controls. And certainly saw that up in Barkerville, where at the Caribou deposit we basically defined a brand new model, a model of vein distribution that had never been identified before. So I think that's a big benefit, and certainly here at Bralorne, another big critical thing that we identified around the veins was these mineralized breccia halos that had never been sampled, never been looked at as an independent resource. So the identification of that and training the crew on recognition and logging of that had a really significant impact, and will have as we go into production. We model that as a separate lower grade ore body, and that helps in our dilution factor. We're actually diluting our high-grade veins with this mineralized wall rock that can have, up to 5 or 6 grams per ton in it, and something that for 100 years was ignored. So I think that they're the things, to be able to look and see things that a general geologist wouldn't be able to recognize. I think there's some of the real benefits I've got from being able to do that in-depth technical study looking at structural geology.
Wonder if you can just give us an overview and the history behind Talisker Resources.
Yeah, we formed the company 2019, April 2019, and really we started off as a greenfields explorer, and that was really our forte. And we staked a large percentage of the Spencer's Bridge Gold Belt, which was a frontier low sulfidation epithermal belt. So frontier, been no discoveries. Quite soon after it, Westhaven Ventures, which became Westhaven Gold, made a significant discovery there, the Shovel Nose deposit, which really made that belt leap from frontier into an emerging belt with that significant discovery. And they've just recently put out a PEA there and drilled a significant resource. And so we attacked that very strongly. We had 22 geologists in the field. We did a major company style greenfields exploration program, minus ADMesh first order, followed up with soils, and we've got a whole number of drill projects there. However, we realized at the time that, well, market doesn't really care about early stage projects until they've got a discovery, until they're drilling out resource. So we started having a look around at, well, can we pick up something that's already at drill stage, or something that might have resource that might be able to excite the doldrums that the market's in. So one of my geologists who went on to become a VP of corporate development had worked with me up at Caribou and had seen the work that we'd done there, mapping and defining the controls of mineralization. And he recommended the Bralorne Gold Project. And I didn't know much about Bralorne itself. He says, well, look, it's an orogenic, a Phanerozoic orogenic system. Maybe you should go and have a look. You might be able to crack the code and turn this into something significant. And I was a bit skeptical at first. It was like, well, we're focused on epithermals here. This is what we've told the market. We've educated the market on the stratigraphy of the mineralization in epithermals, and now we're going to something totally different. So it had about 100,000 ounce resource on it, and was owned by a company, Avino Silver and Gold Mines, who's a silver producer in Mexico. They'd had it for a considerable length of time, and the present CEO's father had actually had it, and it had been passed from multiple hands, but they never really put a lot of detail into it. They were looking at sort of small scale mining. 100 tons a day was what they were permitted for, which I think is super challenging, particularly in expensive first world places. If perhaps in Peru or Mexico, you might be able to get away with it, but it's quite challenging with the economies of scale. So of course it was a very different time back in 2019. Gold price was down, silver price was $15 an ounce, and Avino were having their own struggles in Mexico, just simply with low silver prices. They were doing an exploration program there on a new area that wasn't going particularly well. And fortunately, I gave the CEO a call and said, look, would you be interested in divesting this project? We'd like to have a look at it. And David Wolfen, the CEO, he'd seen the work that I'd done up at Caribou and said, well, look, I think you guys have got the technical team to take this forward further than we can take it. And we'd be happy to do a deal and remain as shareholders and benefit from your success. So we started having a look at it, and what we saw in some of the historical data was something quite incredible, and that was really astounding structural continuity of the veins, both along strike and down dip, and also the plunge continuity of the ore shoots. So really, it's a first, second, third order, very, very classical Riddell style of orogenic deposit. And really, the second order structures only terminate on the first order structures or on themselves. And we can see up to 2.5 kilometres of continuous strike length. And that fed back into some of the history that we learnt about Bralorne. So for your viewers, the Bralorne Gold Project, or the district of Bralorne, is actually really one of the iconic Phanerozoic orogenic belts in North America. It's only beaten currently by production by Grass Valley and Motherlode, the supergiant deposits down in California. Bralorne fed the 1860s gold rush in the Fraser River that opened up British Columbia as a province. First hard rock mining started at the Pioneer Mine in 1886. A long history of production, and serious production started in the end of the Great Depression, sort of 29, 30, and there was continuous production there for over 40 years. 4.2 million ounces out of hard rock sources at 17.7 grams per tonne. So a really incredible deposit, and with the alluvials that have come out, about 500,000 ounces, it's nearly 5 million ounces, nearly world-class status before we even came along. So really incredible deposit and incredible history. Closed down at the end of the gold standard era. I think gold was $35 an ounce, so about, again, $220 current dollar value. So again, orders of magnitude different in the economics. And interestingly, the Canadian government was actually subsidising gold mining and gold production to keep people in jobs, and they stopped doing that in 1970. And Bralorne just couldn't keep going, so it shut down. So quite an extensive history, and even though it's been closed for 50 years, Rob, it still holds a position as the largest gold producer in Western Canada, and certainly one of the highest grade and longest producing. So all this pedigree was there when we came along, and we started bringing in all the historic drift assays, 80 kilometres of underground drifting, all the stopes, and looked at reconciling all the production. And we noticed these incredible high-grade ore shoots, above 25 grams per tonne, and 500 metres wide by 1,500 metres down at depth, and really realised that this is just an incredible deposit. Because it had been held in hands who didn't really take it forward, it had a bit of a stigma in the market. It was like, oh, it's all mined out, or it went too deep, or it was too hot, or there's no more gold there, or there's too much arsenopyrite in it. And that's generally what people thought of it. So initially when we started coming in, it was one camp that was, you guys are crazy, you're just going to do your dough here. And the other camp was, well, Terry Harbort quietly does a pretty good job at figuring these things out. Maybe he can do it. So we started looking at all the historic information, and what we noticed was that between the old mines, King, Bralorne and Pioneer, in the gaps in between them were ownership gaps where they'd never explored, or they just started exploring drifting at towards the end of mine life. So that was a real fundamental change for us, because we knew these veins were super continuous, and the ore shoots were super continuous, and that's why it was mined for so long, because they got on the veins and they just kept going. So we started doing a bit of early drilling, just to validate where the old voids were, where the old mines were, bring that in. And we had some great work done with SGS, their geomatics team, that helped us to bring those old mine plans into a modern coordinate system that we could work with. And then we really started to test these kilometre and a half gaps between the old mines. And lo and behold, there's a whole pile of veins there. And most of our resource we were able to develop was just simply sitting there very close to surface, in these gaps where the old timers, they didn't own the ground in between the mines. And the majority of our resource, I think only about 10% of it's remnant, so in between old stopes. And we were very stringent in our remnant definition. There have been some classic failures like Pure Gold, try to mine remnant stopes, a lot of development. So that had occurred pretty soon after we got going. So we were very cautious about bringing in remnant area. But luckily we didn't have to bother because we had 80 veins that were previously not drilled and not discovered. So we were able to take the resource really from 100,000 ounces to 1.7 million, 165,000 meters worth of drilling. And now we're taking the path to take that into production.
Which moves next on to my next question. Obviously, you're at an inflection point where the company is now in transition to obviously take Bralorne into production. I just wondered if you can walk us through the next steps.
Yeah, well, look, we're passing into production now. We mobilised mining crews early this year, reinstalled all the services. Previously last year, we'd done the portal development, about 650 metres worth of decline development to get in there. We're currently in the waste development phase, and we've probably got another 3 weeks or so, Rob, in waste development. And then we start doing long hole development along the veins themselves. And then probably end of April, early May, we'll be in our first production stopes. So we're right in the middle of this transition right now. So very exciting times. Our average grade here, fully diluted, is looking great. We're looking at about 11 grams average over the first 5 years of production, fully diluted. So looking really good for us. We didn't expect to see this stellar gold price. A lot of economics, we sort of started off at 1885, and now we're slowly moving up what that valuation is. So super interesting, super great time for us. Luckily we got this tailwind of the gold price, but because Bralorne's such a high grade deposit here and high margin, we would have been able to keep going anyway, I think, without this fantastic gold price we're seeing.
You've also have some great ore sorting results. I just wonder if you can tell us a little bit about those.
Yeah, sure, Rob. I must admit I've been made to eat my words, so I'm a little bit sceptical of ore sorting. It's often one of these things that's oversold and underdelivers, and a lot of projects that aren't economic without it tend to sell the benefits of it. So I've generally been pretty, well, not negative, but fairly sceptical of the benefits that ore sorting can bring. But I must admit I have had to eat my words because our preliminary results here were super successful. We basically took material from all across the deposit. The veins are the same everywhere, basically. Quartz carbonate veins with crack seal sulfides in them, very classical, orogenic style. But the real trick was being able to sort and remove the host rock. So the host rock changes across the deposit. So that's why we did a deposit-wide style of thing. And we looked at XRT, which is a density-based sorting sensor, and a laser sensor as well. So laser looks at crystallinity, and it's fairly specifically used across the industry for quartz separation, particularly with industrial minerals and things like that. XRT didn't go great. So I was validated in my slightly negative view of ore sorting, and the main reason I think for that was we just don't have enough sulfide in the material. We've got a pretty small percentage, so it just wasn't enough here to make a density difference between it. Whereas the laser crystallinity worked incredibly well. We saw it across the deposit, remove between 35 and 55% of waste material. We saw it take the grade from our head grade of, I think it was 14.4 up to 27.7, so nearly a doubling of the grade. and the recoveries were great, 95 to 99%. Well, I am pretty excited about it now, and we're certainly going forward to the next phase, which is sending run of mine over to Tomra in Germany to get that processed. Our consultants expect it, to get the same sort of results, maybe a 5 to 10% variation, but we want to see it in a run of mine scenario. And for us, it has some really great benefits. We're taking an innovative approach to our production. We're not building a mill here in the first couple of years. We're trucking our material. We're located really in the heart of British Columbia's mining district, and we can truck on highways to mills that are ore hungry. So it basically can remove our trucking and milling costs by a third to a half, which has an immediate impact on us, but it also has some longer term effects when we're looking at developing resource mine planning. It changes our classification of lateral ore. It's potential that all of our lateral ore now could get classified as ore instead of waste. Brings forward a lot of narrower veins or lower grade veins that we mightn't have put in resource because of cutoff. So it now brings them into focus, can essentially halve our cutoff, so bring a lot more material in, can allow us to do our lateral development at a bigger width, potentially looking at 3.5 meters as opposed to 3, automating that through jumbo usage. And then long term, as we look to transition to our own mill, maybe we can right size that mill at 50% of the size that we need and halve our energy costs. So I'm quite happy to have been eating my words, simply because of the benefits that this technology can bring, and it's certainly becoming more and more accepted and used throughout the industry than it has been in the past. So yeah, I'm very positive on it now.
Good to hear. How does Talisker approach, obviously, sustainability and environmental responsibility as you move, obviously, the project from exploration through to, obviously, moving into operations?
Well, obviously, we're in British Columbia, which is very strong in its regulation for what miners need to do. So every permit amendment we do has a whole series of management plans that have to be signed off by independent consultants before we can go ahead. There's also a lot of new things that we're looking at currently with management of tailings, management of waste. We do a lot of metal leaching study and acid generation studies. We're hopeful that a lot of our waste ore can actually be classified to be able to be used as gravel material, and we've been working with our First Nation partners to be able to look at building a business about being able to utilize that waste material either for road surfacing, for gravels, or for usage in larger scale projects. See Hydro, which is the government-run electrical company here, has actually got 2 hydro generation dams in our valley. About 15% of British Columbia's power comes out of that valley. So they're looking at renovating that, putting a couple of $2 billion into it. So we're looking at a 3-way partnership with our First Nations to take our waste material and build it into the dam wall. So it has impacts across the board, and for us, it helps to reduce our waste footprint. We don't have to keep increasing our disturbance if we can get that through. Also tailings as well. There's been some classical failures in British Columbia here with wet tailings dams, and I think particularly here in Canada that there's a general shift of the industry away from managing wet tailings. Because we're all working in high rainfall areas, high snow areas. Perhaps they're very good in Australia or Mexico or Peru, where there's not a great deal of rain, but here we get buckets. Even us at Bralorne, we're in a big rain shadow from the coastal range. So looking into transitioning across into paste backfill, putting it back in the hole. We've got tons of holes there underground, and also looking at transitioning into dry stack. It increases OPEX, but then it balances out long term because part of our reclamation bonding is 100 years of water management. So if we've got a hill instead of a lake, it really removes that out of it. So it has a distinct economic benefit as well as the sustainability impact there as well. We work very closely with our First Nation groups, and we work with about 5 First Nation groups here at Bralorne. And we have agreements in place with the dominant claimant there, which is the Hoiston people, or the Bridge River Indian Band. And really, they were the first call we made when we acquired the project. And we meet with them on a monthly basis. And we meet with all the groups actually quarterly at what we call the Environmental Monitoring Board, which is representatives from each of those groups, from the Department of Environment, Department of Mines, looking at our sampling and monitoring results across the whole project. It's also a great platform there to be able to engage and keep them up to date on the levels we're at. So they're not hearing it from the market. They're not hearing it from the rumour mill or the newspaper. They're hearing it directly from us. And generally, very positive support there going forward. We have what's called a bridging agreement with Hoiston that really lays out the framework of how we engage. We worked with them to form a business development corporation, Bridge River Management, and we do a lot of contracting with them. They're joint venture partners on our ore trucking, on our ore trucking strategy. So really integrated scenarios, and we're looking more longer term of, well, what happens after Bralorne's finished? And hopefully that's 20 or 30, 40 years down the track. Been mined for 40 years. Let's hope there's another 40 there. But really working with them on, well, how can we leverage what we're doing here to bring long-term benefit to community? Not just what we're going to produce, but a real long-term benefit. And dealing with some of the key things that really matter for them. And the big 3 are tailings management, waste management, and water management. They're the big 3 that we're trying to have them involved with as an early stage, so they have a voice on what we're going to leave behind, and they're integrated into the management of that.
What's would you say some of the biggest challenges the company are facing at the moment as you move into obviously operations?
Realistically, Rob, we have all the challenges that any junior miner has, and the most obvious one is generally undercapitalisation, and how far can you go with what you have? All the other risks sort of are the ordinary general risks. Things like blasting rate. How rapid is your development? Do you have too much overbreak that dilutes out the grade and makes it sub-economic? How can you access people? And these are all critical things that feed into the risk profile of what's going on. We've been fortunate to raise good capital through a structured deal with Sprott Streaming and Royalty. So we have the capital here to go forward, but it's always advantageous to have more capital. We'd bring our production profile forward. We're on a pathway here to get to 100,000 ounce production in 3 to 4 years. But if we could bring that forward to 2 years, then it puts us in a much better position from a cash flow perspective. Looking at developing another portal in another area, so effectively another mine. Looking at trying to double our production target to 200,000 ounces. Well, it totally changes the production of or the scope of our project. And certainly coming in the last 2 years, junior markets have really struggled with capital. So many outflows from our traditional funders, and the traditional guys just have got empty pockets. Or tell you, well, we can sell your stock and give the money back to you in a private placement. So it's not really optimal optimal for taking projects forward. And I'm glad we're starting to see some change to that now. We're starting to see more capital coming in so projects can get up and going. And we've been very fortunate because we haven't been constrained by that. We've been able to take the project forward and really target a self-funding mechanism. Those operational challenges or the operational risks that we see coming forward, I think it's important to be cautious and patient when starting up a mine. There's a lot of things that you don't fully understand. We're fortunate geologically because we've got great continuity of the veins. Our distribution, we don't have a lot of super nuggety material. I think out of all of our drilling, 165,000 meters, there's only probably 20 samples that are above 100 grams per tonne. So the database is very robust, not a lot of huge variability. So that's very fortunate. Our ore shoots are very continuous. The historic one's up to 1,500 meters down plunge. So a lot of those things geologically are mitigated for us. We don't have to worry about them. But the operational sense, we've seen some challenges here with some projects who've just gone too big, too fast before they understand how the rocks are going to operate. And the latest classic example of that is Ascot. Needed to feed a 4,000 tonne a day mill right from day one. So our production profile is almost the opposite of that. We're starting off here at just 100 tonnes per day for the first 3 months until we get everything sorted out. So till we understand our drill patterns, till we understand packing for blasting, so we can minimise that dilution. And we know what our rate is. And then we step up to 175 and then 250, 500, 750, and then hopefully beyond that. But we're taking that metered approach because we understand that things screw up in junior mining. And we've had a few things here from left field. Our neighbour's president seems to want to put tariffs on everything. So how does that impact on where we get our steel and our explosives and our consumables? And we certainly saw a rush on consumables, all the mines around us buying up everything because they don't know or they haven't got a certain picture of supply chain over the next several years. So that's something that we struggled with in the first month or two here, and now we've got it under control. But we still don't know what the future is going to bring. So taking a measured and conservative approach, I think, is always better. And our economics here, I think we've bumped up our gold value to 2,300. Well, if it's 3,300, okay, we're going to make absolute buckets of money. But if it comes back to 23, we're still in a good position. And I'd rather have that buffer available to us because it's junior mining. We haven't got massive resources like a major company have. So we've got to be conservative. We've got to be frugal with what we do and take a steady state approach because I'm starting to get too old and I don't want to have a failure as my last project. We want it to be successful.
Yeah. And talking about futures, what do you see Bralorne growing into? And what are some of the sort of long-term plans and strategies? And I wonder if you obviously can include the Ladner Gold Project and obviously Spencer Bridge.
Yeah, look, in our short term here, we're really focused on just getting up and into production. So we've really suspended any other work that's outside of Bralorne. It's our sole focus. Ladner's still sitting there in the background. Still got a good resource, about 600,000 ounces there. We think about 30 or 40,000 ounces recoverable out of the tailings as well. And Spencer's Bridge, well, we've got numerous drill-ready targets. It's frustrating that we can't move any of this forward because of how the market's been. But when we've got our own cash flow and free cash, then we can certainly re-look at those second and third projects. And our Golden Hornet project, we drilled 14 holes there several years ago and hit ore-grade mineralisation in every hole. And had to park it because there's just no available capital. So Bralorne itself, well, with the current resource we've got, we've got almost a 20-year mine life pushed out there. We're looking at a lot of the historic data and working with our qualified external qualified persons to be able to bring that into a resource base. And a lot of these veins were exploration drifted on up to kilometre and a half, sampling every 2.5 meters on the faces. So it's very high quality data, level maps, level plans that we're digitizing and bringing in to validate all this historic data. And we're hopeful there that maybe we can bring in another 1.3 to 1.5 million ounces without having to drill hardly a hole, because all this has already been sampled. So we're looking at a lot of that right now, and that'll probably feed into an update here to our resource and economic model. And really what we'd like to do is look at Bralorne as a multi-mine complex. So at this stage, we're starting at Mustang, which was easy access. You can walk in from surface. There wasn't a lot of development cost. The veins were already at indicated level, channel samples on them. So it was very easy, low risk start. But certainly what we want to do is start to expand that out. And the Bralorne resource footprint's about 5.5 kilometres along strike. So we're looking at putting in multiple portals. And Mustang itself, we can escalate that up to 750 tonnes per day, so about 100,000 ounces, we believe. But we want to start looking at other access points and looking at doubling or more that production rate, to look at 1,500 to 2,000 tonnes per day. So getting it up to 200,000 or plus ounces per year, and that's in that footprint. But really, we've got to start planning now for, well, what is there outside of that footprint? Because we own the entire district. We've got 14,000 hectares, 33 kilometres of strike length. And there's 47 other old historic vein mines along that strike length that have never had modern work. And some of those have even got historic resource. Congress, it's, I think, 187,000 ounces at 9 grams, only drilled to 200 metres from surface. And, Bralorne was mined to 2 kilometres. So we know there's a lot of potential there. BRX, we drilled it, I think, almost an 11-ounce intercept that we got there at the BRX camp. So ultimately, what I think, Rob, is we'll actually end up inverting what our strategy is. Our strategy here is to get into production, truck our ore, don't pay 300 million for a mill, try to build a war chest or a cash pool to be able to transition to that. But ultimately, I think what the Bralorne camp would end up as is a hub and spoke scenario where we've got our centralised mill at Bralorne itself, at the complex, but we're trucking from our own satellite deposits. And, I think we've got very good chance here at Congress to maybe add 500,000 or 1 million ounces close to surface. And we need to start exploring these other deposits and potentially build up an accumulation of satellites with Bralorne as well. And, Bralorne, we think, well, certainly from the sampling that's been done, we think there's at least 5 to 8 million ounces directly underneath where we're going to be mining. And it's all already been drifted along and sampled. So it's not high risk to be able to develop that. It's just time and capital. And at the moment, we're developing our own capital. We're into production, see cash flow here in the next 3 to 4 months. And hopefully we can realise these dreams and really bring Bralorne back to being the incredible deposit that it is. And it sits there as the largest producing project in Western Canada, and really we think it can double or triple that, particularly on the camp sets over time. So really great to see that historic project being reborn and supporting what it's always been known as a very high-grade, high-margin deposit.
And lastly, just wonder if there's anything else that you want to tell our audience. Our audience are mainly from the mining industry, although obviously we do get investors listening to episodes. And maybe you might want to cover the management team, the important people behind the company.
Yeah, absolutely. Look, I'm very fortunate to work with a really great team. We have a mix of old grey hairs and very young, very motivated younger team. On the management outside of myself, Leonardo de Souza is our Vice President of Resource and Exploration, and he's really led the drilling and the modelling of our resources. He was one of the ones who recommended that we take on Bralorne, simply because of the incredible grade that he was seeing and the continuity in these. Leonardo's a 40-year veteran of the industry. Grew up in Anglo-American, and then back in the old days when AngloGold got spun out of Anglo-American, he went across to the new gold division. He actually ran the Cuiabá mine in Brazil for 10 years. So a real wealth of experience there, and he's doing a great job now bringing the next generation up. So training and developing those younger groups. So we've got a really robust succession plan there. Very fortunate here with our VP of Technical Services, Felipe Castaneda. Actually was a geologist. I worked with him on a few exploration programs prior to Talisker. He left the industry and went into project management on the construction side. Was managing, I think, 28 projects simultaneously. Got burnt out and decided to come back to mining. So he's working with us on a lot of the development on the technical services side, contracting, and all the contractors. So a great job. Bill Curry here is our general manager. Bill's an old school mining long hole guy out of Ontario. Worked formerly with St Andrews Goldfields, and then was mine manager at Macassa under Kirkland Lake Gold, who of course was bought out by Agnico. So very, very seasoned mine manager, general manager in place there. And I'll also mention Hugh Bowden, who's a Brit. So we've got some Brit listeners. He's a great senior engineer. This will be, I think, his third mine build, and Hugh manages all the design work and all the scheduling that goes into the production of the mine. So very innovative as well on that young team. And we'll just mention a few people, technical people on our board. Firstly, Eric Tremblay. Eric Tremblay was a former shaft sinker who became a mining engineer, worked for many years with Agnico Eagle. He was also general manager at Canadian Malarctic with Cisco Mining, and he's currently COO at the Curragnolt deposit in Northern Ireland with Dalridian. And he also worked as COO for a Cisco Development Corp here in BC. So very experienced across the board. And final mention is Christy Smith. Christy Smith's one of the senior consultants at Falkirk, who sits on our board. She's a First Nation negotiator, so very skilled. She's got an MBA and a master's in Indigenous engagement. So very skilled and very fortunate to have her on our board. So very well-rounded group, and a lot of experience, particularly with these style of deposits going into production.
Terry, appreciate your time. Thank you very much for sharing the story, telling us the history of Talisker, and obviously the Bralorne project, and wish you well as you move into production. And hopefully you can come on the podcast either later this year or next year and give us an update and tell us how wonderful things are. And you never know, that gold price might be at 3,500 plus by then, and we'll all be singing loud for that.
I hope so, Rob. It'll be a pleasure to come back. We've certainly got some interesting news coming in here in the next few months. And from my perspective as a CEO, it'd be great to see cash flow. Good to see money coming in instead of money always going out. So I'm very much looking forward to that.
Yeah, certainly. And if our audience wants to follow the story, get updates from yourself, what sort of social media platform channels are you on and promoting the story?
Sure, Rob. Look, we're basically across the board there. Initial start point, of course, is our website, taliskerresources.com. But we're there on LinkedIn, Facebook, Twitter, or all of the major platforms that we distribute our information out on.
Yeah, we'll include those in the show notes of companies for easy access, so our audience can see what you're up to and see how you're progressing.
Fantastic. Thanks very much. And I encourage anyone who's interested to join our email distribution group. You'll get all our press releases and all that great information. See our updates on mining and also our hopeful new updates on ore sorting. So that's another great platform with our webinars. We try and do a webinar about once a week to give our shareholders and interested parties just an update on where we're at and how we're going.
Great. Terry, all the best for 2025 as you go into production, and hopefully we'll speak soon.
Thanks, Rob.
Yeah, great. Thank you for listening. Hope you enjoyed that episode. Please keep sharing these episodes far and wide, not just amongst people in Canada or North America, but globally as well. Terry's obviously from Australia. I'm from the UK, but we don't need to just share it amongst those countries. We want to share it globally. So thank you for listening. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.